Hello and welcome to Dialogue. A series of high-level briefings have recently been held to outline the progress under China's 14th five-year plan, which ends this year from booming trade and infrastructure expansion to record foreign exchange flows. Data also shows the resilience of the country's economy despite global challenges and mounting external pressure. So how has China managed to keep its economy on track? What has China done to manage the trade tensions and global uncertainties? And what are the key engines for growth as the country pushes ahead with modernization? Join us for discussion today, live from Beijing. I'm Xu Qinduo. Joining me now are Wang Yaojing, Associate Professor in Economics from Peking University, Wang Dan, China Director at Eurasia Group, John Ross, Senior Fellow at Chongyang Institute for Financial Studies, Renmin University of China, and Daniel Senger, Managing Partner of Wilton Partners. Welcome to Dialogue. Yaojing, I will start with you. If you look at the economic performance of the first half of this year, and also probably over the past 4 to 5 years, over the so-called 14th five-year plan, from 2021 to 2025. Here's a quote from an official from the NDRC. Looking back at the 14th five-year plan, the challenges encountered were greater than expected, but the achievements also exceeded expectations. What do you make of the statement?
Yes, I think for the last 5 years, we definitely experienced a lot, and a lot of the challenges were unexpected. For example, the pandemic, but we were able to go through that period, and we were able to recover, and we're seeing a quite strong recovery. In fact, like in domestic demand, also looking at the tariff war that we're facing this year, we're seeing the trade is actually quite resilient despite these geopolitical tensions.
John, resilient as it is, the Chinese economy, but the concern is, of course, all the people have the question, whether it's sustainable, whether the Chinese economy or the growth momentum will continue in the face of various headwinds. How do you look at the prospect of the Chinese economy?
Well, I think the last 5 years, and that will continue, show the importance of looking at fundamentals and not getting carried away by looking at temporary ups and downs. Because, of course, the pandemic was completely unexpected. The tariff war could maybe have been anticipated, but the severity, etc. But really, China's economy is determined by the fundamental factors that determine any economy. And to know how fast an economy is going to grow, you need to know two numbers, which is how much of its economy, what percentage of the economy does it have to invest? And secondly, how efficient is the investment? Well, China's investment is very efficient. It has to invest about 8% of GDP in order to grow by 1%. The US has to invest 10% to grow by 1%. And in this case, the lower the number, the greater the efficiency. To do that, it invests about 40% of GDP, and that yields you a 5% a year growth rate. And this is basically what's been hit during this period and continues to be hit. So it's showing the way that getting the fundamentals of an economy correct allows you to navigate and deal with unexpected variants which take place during that, and that will continue to be the case in the future. And it's the correctness of these fundamentals that means we can be sure the economy will continue to perform approximately in the way that it's doing at the present time, whatever are the unexpected developments.
The fundamentals. Wang Dan, the Chinese Foreign Ministry of Commerce, has shown that the retail sales of consumer goods, doubled. Social retail increased from around 40 trillion yuan in 2020 to over 48 trillion yuan in last year, and with an average annual growth rate of about 5.5%. And the expectation is that this annual revenue will exceed 50 trillion yuan by the end of this year. I mean, how important is this sector to the national economy?
Well, the retail sector and the general consumer sector is critical for China's growth, not just now, but also in the future. Before 2020, consumption contributed to about 60% of the GDP growth. After COVID started, actually this number has been going down. Along with that, we also see a lot of the goods have price decline in the past 2-3 years, and this trend seems to be deepening. So in the future, I still believe that consumption and the retail market, especially in smaller cities, will constitute the bulk part of growth. But right now, we're in a very deep transition, and income prospect and job market both need to be strengthened before a major recovery can happen in the consumer market.
Wang Dan also, Minister Wang Wentao said, China's social retail is equivalent to about 80% of the U.S. But if you calculate that using the actual purchasing power, according to data by the World Bank, China's social retail has achieved like 1.6 times that of the U.S., surpassing it. What should we make of this comparison here?
Well, this is the difference between a nominal figure and a real figure. By purchasing power parity, actually the consumption volume in China has way exceeded what people have generally think the retail market is performing in China. And that has reflected the resilience in the mass consumer market. And I don't think that the Chinese consumers are really in the same comparison level as the US consumers. There are a lot less varieties of goods available for American consumers. Everything's a lot more expensive. So if we're comparing to the retail sales, the US market is way better. But with the same amount of money, the bundle of goods that an average Chinese person can afford is has way higher variety and actually better quality in general.
Daniel, how do you compare, the consumption habit or the market between China and the U.S. in terms of this retail sector?
Yes, what we can see is fundamentally the way purchasing is made online, whether it's handheld or on apps, make it very easy to consume. You can argue that early generation of e-commerce came from the US, Silicon Valley, but it started off at a desktop and went to the application. Here it went from the handheld application, and it developed far more richer functionality supported by 5G network and such. That gives you more of a social entertaining experience that allows you to shop online quite easily. Also, I'll argue that it's so easy to buy either food or merchandise online. It doesn't matter if you want to get a food delivery or if you want to buy a tube of toothpaste. You can get it in an hour's time to get it delivered to your door. It's quite an amazing experience that I don't think in the US they understand. That in turn, that less friction of acquiring or merchandise has accelerated consumption in our view.
Another factor, contributing to the global or Chinese economic growth, Professor Wang Yaojing, is of course the foreign trade. For China, export is critically important, and according to the Ministry of Commerce, China has led the world in total cross-border trade in physical goods, surpassing the US and Germany. At the same time, of course, it is diversifying a bit away from the US to other markets because of the tariffs, because of the so-called trade war between the two countries. How do you characterize this process, diversification, and also the continuous rise of the Chinese trade with other countries? With your kid behind you.
Well, there are, yes, my son. There are a few ways that we characterize this diversification. First, it is trade partners, of course. So U.S. used to be China's biggest trade partners and accounting for about 1/5 of China's foreign trade volume. But now this number has been declining, and I think it's only been about 13%, and it's surpassed by EU and also ASEAN countries. So this is because of the Chinese strategy of diversifying partners and making more friends in the world and making more these Belt and Road initiatives. And also diversifying means also in the currency that it's traded in. So we're seeing more and more trades are done in RMB transactions instead of the US transaction. I think this is a very good addition to the world's trade, because it gives the countries in the world, whether it's a third world country or it's a developed country, more choices, not whether in goods or origin of the goods or even in the currency that is trading in. So it would be beneficial for countries to have more varieties to choose from.
Well, John, of course, we are in this transitional period. You do see these uncertainties, let's say, like countries in between China and the US. You have the EU countries, you have Japan, Korea, and ASEAN countries. But still, I mean, despite this diversification, let's say, effort or strategy, China is playing defensive. But then people have this question, like, people are warning of, quote, a sharp export slowdown in the second half of the year, citing this notable payback from prior front-loading of still high tariffs and withdrawal of tariff exemption for small parcels and latest U.S. efforts to crack down on transshipments. Your observation for the next half of this year?
Well, I just think that that's greatly exaggerated. I mean, if you look at the facts, the US now only accounts for 11% of world merchandise trade. It's a somewhat slightly more in terms of imports, but that is simply not big enough, whatever it does, in order to block the general development of world trade. And you can see what is exactly happening with China's trade, which has been going up. The trade numbers, the export numbers are very good. And you can see, in fact, that the percentage of China's exports going to the United States, because I've just done the figures for the last 3 months, which is the 3 months that take in the impact of the tariffs, has now fallen below 10%. And as one of your previous speakers said, it used to be above 20%. But China's overall exports are still going up. Why? Because they're going into other markets, and the US is simply not big enough to factor in world trade in order to affect the overall prospects for China's development of trade or that of the other countries. That is, Trump can certainly alter the trade pattern of the United States. I mean, de facto, if you take the combination of the devaluation of the dollar, which is about 10%, plus the 10% basic tariff that you put on everything, plus add a bit more, that means you've got a 20% increase in imports. I'm sure that'll have an impact on the trade of the United States. I would expect its imports to go down significantly, including from China. But it's just too small a part of the world economy to affect the overall impact of the overall trend of world trade. So I think that such views are exaggerated. There is a negative impact on China, obviously, of the US, but the rest of the world trade, other countries don't want to deglobalize. So I think this greatly exaggerated prospect. There's going to be a sharp slowdown in exports in the second half of the year. It doesn't, again, means they're not looking at the fundamental numbers.
Well, Daniel, you were nodding your heads. But we know, up to now, the U.S. has reached a deal with more countries, the Philippines, Japan, for example, and we don't know whether there will be a deal between the U.S. and the EU. But in general, there are more higher tariffs for Japanese goods, for the Philippines goods, goods from Indonesia, Vietnam, etc. But in that sense, will that, most people would say that will lead to a less negative effects of reduced, costly trade among nations. In that sense, every country will be affected, including China.
Yes, you can make that case. First of all, we don't know what to make sense of these trade agreements. Personally, we think it's a lot of nonsense because it's hard to predict what's been agreed, what the details are. And there's also the issue about transshipments issues. There's no standards, there's no process, procedures to identify what is a transshipment. But lastly, we spent the last 3 months earlier this year, spending time in Jiangsu, Zhejiang, Guangzhou, talking to a lot of third and fourth tier cities, talking to factories there. People don't seem to care about the trade stuff, the war. They're not complaining. They're getting on to redirecting their business elsewhere. When you see such firsthand activity of people just getting on with business and redirecting elsewhere. You see that could, in our view, smooth over some of the otherwise headline problems in trade. Of course, there's going to be hiccups, but we see a lot of energy out there to survive.
Wang Dan, turning to the domestic situation again here, of course, China's Ministry of Transport in their briefing, saying that major progress has been made in terms of the national transport network during this 14th five-year plan. And if you look at these high-speed rail mileage, for example, China leads the world, accounting for over 70% of the global track length. Air travel now reaches over 91% of the population. So that in itself, of course, indicates investment in infrastructure expansion, boosting the economic growth. On the other hand, it creates this convenience or incentive probably for the transfer of goods and personnel, at least inside this country. So, that's a boost to economic growth. Is that the case?
Oh, it for sure is. China's infrastructure build-out, especially in the last decade, has been a key growth engine for Chinese urban expansion and also rural areas. It has not only supported industrial expansion, regional integration, but also increased China's competitiveness in export. And when we look at how much has been built and how much people use it, it's even more striking. Actually, after years of investment in infrastructure, Chinese now enjoy the per person cost of transportation among the lowest in the world, and so much lower than almost all the emerging markets. And that has been the foundation for the regional growth. But at this point, with most of the core network completed, the marginal economic returns are nonetheless diminishing. We have seen a lot of the infrastructure being built up in smaller counties and not used enough. So the future gains will become less from laying out new track or new railways, new roads. And a lot more of the spending must be spent on things like urban renewal or the upgrade of buildings or the build up of a certain rural region of the infrastructure rather than a massive infrastructure overall as before.
When you speak of infrastructure, what about the latest announcement of this, people call it like a massive new dam project on the Yalongzang River? So the expectation is, its hydropower generation would be 3 times that of the Three Gorges dam there. So investment would be like 1.2 trillion yuan. Trillion yuan. That's a lot of investment, that has some very positive response from the stock market too. What will be the impact in terms of economy, in terms of, power generation?
So this is the largest water project in human history. And I've been following the development of this project in the past few years. So the proposal and the implementation of this level of project basically shows the commitment of the central government on achieving carbon neutrality, as well as to provide jobs in the economic downturn. And the last time, let's not forget, when the central government decided to build out the Three Gorges Dam, it was around the time of Asian financial crisis in 1998. So that was the single project that has reversed the economic cycle. And this time, it will serve in a similar fashion. And by employing a lot of the low-skilled workers and a lot of the technology companies, this will provide the momentum that China has been needing for a long time. And 10 years down the road, we will notice actually the dam is not only providing electricity for the region, but also it will rebalance the water usage across countries, including China and India, as well as Bangladesh.
Yaojing, of course, if you look at the dam, the project that people are expecting, this is also part of the overall efforts by the nation to produce as much as possible so-called renewable power or clean power, so as to reduce the dependence on oil and gas or the coal, the fossil fuel. So that's, that itself is significant in terms of this transformation of the energy mix there.
Yes, I think there are estimates about how this dam can contribute to our carbon goals of China, and I think the number was like that's about 5%. This dam alone is like 5% of the 2035 carbon neutral goal and 10% of the 2060 carbon zero goal. So that alone is a significant amount of carbon emission reduction, and also not to mention the huge employment opportunities that it would create at least for a decade, because we would expect that it would take that long to actually build and run successfully, and also to create this this model for the world that how the clean energy can be produced alongside not just the water energy, but also alongside with solar and wind energy that is very rich in Tibet. This synergy is something that the world can be looking forward to.
Well, Daniel, of course, we have this, government-funded investment domestically, but also equally important is overseas investment. What about the overseas investment? We are seeing the flow, into China, I guess partly because of the geopolitical tensions, is not probably as high as expected. I'm sure people would love to have more foreign investment in different sectors in China. So how do you see the situation here?
Indeed, we've been working with a number of both Chinese and foreign companies in cross-border M&A, particularly in Europe, but also in Southeast Asia. There's a great interest, say, in areas related to chemicals and engineered plastics related to EV investments, the supply chain, and building up in Europe, investing in Europe to be part of the EV supply chain, as an example. However, I believe the regulators, the FX regulators, SAFE, is really conscious about movement of onshore RMB to be transferred overseas at the moment, and also making sure that it's a good strategic case. However, we're starting to see that, and the same thing with Southeast Asia. So we see a great opportunity for cross-border. Finally, true Chinese multinationals should be developing in the future. However, that also creates risks of having buckets of offshore RMB. Beijing going to manage both CNY and CNH, and how that is going to happen going forward. But that's another topic.
It's another topic. John, of course, if you, as a professor, Li Daokui from Tsinghua University said in the recent social post, is that if you look at the numbers of the economy, it looks beautiful, but the people, they don't feel as beautiful as the number indicates. There's a gap between how people feel about the economy, about the economic growth, and the real growth over there. I mean, both sides are true probably, but why and how can we, let's say, overcome that kind of a gap?
Well, I wouldn't attempt to say how Chinese people feel. I have to look at things like the numbers. But what China has to understand, the Chinese people, I would say, is that they are doing extremely well in a world economy which has got some real big problems. I mean, if you look at the situation in, for example, the United States, you had under the whole of the last Biden presidency, real wages actually fell over the 4 years. And in Europe, the economy is growing, at less than 1% a year. So the international situation is not terribly good. In fact, it's in Europe and the United States, as you can see by political discontent, it's extremely bad. I won't attempt to say what Chinese people feel, but what I do know is that the economy in China is doing extremely well, contrary to what was projected by the United States compared to the rest of the world. I mean, I slightly disagree with some people who said that the Chinese growth figures for this year were unexpected. I thought they were very expected, both from the economic fundamentals and anybody following the numbers during the year. Okay.
That is true. Wang Dan, I think what John said is true. If you check closer of the U.S. consumers, people are complaining about the inflationary prices, so basically of everything. Means you earlier mentioned about this, the consumption here, domestic consumption, which remains weak, and of course the property market remains to be fully stabilized. But what the government is doing, of course, with subsidies for home appliances, yes, we do see there's growth of domestic consumption in that respect. But then the question is that whether that will be sustainable, as one article asks, how long can the government, subsidize for the consumption? What is the long-term solution for what's your prediction for next year, for the later half of this year in particular, about the policy, to be mapped out by the government?
Well, the second half of the year, the economic situation will be very different from the first half. Because the first half, China did face the problem of tariffs, but that was a fake threat. So there was a lot of front-loading of shipment just to prevent a future tariff hike. And the second half, the tariffs will be real if China-US won't reach an agreement. And we believe that in the second half, fiscal stimulus has to step up, because the consumption in the first 5 months was really good, but in June already showed some weakness of signs. And the housing market in June also performed very poorly. So this, to me, suggests some spillover effect of the sentiment that's coming from the tariff threat. And the domestic consumers, they are more afraid of the uncertainty than actual tariffs. And when I speak to the domestic factories, businesses, they don't really care, actually, if the tariffs is 30% or 40%. They could shift to other markets as long as the tariff is a fixed number. But now, the future investment plans are mostly stalled. And for the Chinese government, the Politburo meeting in late July will be very important watching point. Then people will understand what the bigger plan is for the rest of the year. But I believe China will need another maybe 1 trillion to 2 trillion of additional fiscal stimulus to really defend a 5% growth for 2025.
Mm-hmm. What kind of a stimulus package are you looking at?
So I think it will be very similar in the fashion as of 2023. In the NPC meeting, October 2023, there was more issuance of the ultra long-term government bond targeting for the long-term infrastructure. And this year, we don't want to see some short-term stimulus for housing or for the local government spending. We want something that can sustain the growth in the long term, kind of like the dam project. So maybe the urban renewal project that's targeting the upgrade of old housing, of old pipelines, and some more targeted subsidies for urban families and rural households. And these will have immediate impact, but also is more sustainable for the long run.
Mm-hmm. Yaojing, how do you look at this 15th five-year plan? Are you expecting, say, a continuity with prioritizing like innovation or high-end manufacturing?
Yes, I would definitely agree with a continuation in the next 55-year plan with a broader strategy to be focusing on innovation because we still have to solve this technology sovereignty problem, which is kind of the root of all of the issues and conflicts we're looking at today. And also, I think on the other hand is the focus on the social safety net, which is echoing your mentioning about how people are feeling about this economic development, how it's affecting their own lives. So we're going to see probably a lot more spending, including a stimulus plan in the education and healthcare.
Well, with that, we are ending today's show. Many thanks to our guests. You can also find us on the CGTN app on YouTube. I'm Xu Qinduo. Thanks for being with us. See you next time.